Let's say you are out there, you only have 500 Kenyan shillings, and you're like, well, I would love to invest on these areas that you just officially talk about. You know, I love bonds, I love all those things, but I may not have that amount of money because obviously, if you go the primary way to invest on, by the way, on these bonds, you need like a minimum of 50,000. If you go the treasury bills way, you need a minimum of 100,000. So, but if you have 500 Kenyan shilling, that's like $5. How exactly can you invest on these bonds and be able to earn something and you move to the next level? So the era of excuses, I don't have money. Are we together? It's gone. Today we're going to talk about as little as 500. How do you get yourself into these bonds, the T bonds, and something called the C bonds? I know you're like, what? What is a C bond? Yeah, I'm used to hearing of T bonds, but what are C bonds? I'm going to explain that, and that is exactly what this video provides for. And by the way, did you just see what I've just done there? I come here, I share with you the investment options that you have, no matter how small amount of money you have. Last time we talked about how to buy shares with as little as 200, 300 Kenyan shilling. Now here we are, I'm talking about as little as 500. And I do post this kind of videos each and every day. And if you don't want to miss any of my good videos, this is how you do it. You know, just below there, next to the number of subscribers I have, okay, 175 or whatever the time you're watching this video, next to that number there is a small name written subscribe. Hit that magical button, turn the notification bell, and make sure that you like the video. Only those qualifications, and guess what, all of them are free. Let's get into the business. Okay. Here you are. You have your only 500. You would love to get yourself a taste of the bonds and the C-bonds. First of all, what are C-bonds? T-bonds, of course, we know it means treasury bonds. Treasury bonds. These are securities that are offered by the government when the government want to have some supplementary budget or need some cash to supplement their budget and what have you. They jump into the Kenyans or they jump to their local citizens and then they borrow from them so that they can do whatever they do. That's what we call the treasury bonds. That one is quite popular. Then excuse me. Then we have what we call the C bonds. C bonds, what are the C? C stands for corporate. You know, corporate bonds. Corporate bonds. Just like the way the government borrows, also the corporates. Corporates are companies, they are big companies. They can as well borrow to actually be able to run their day-to-day activities. Just the way usually government borrows, also the corporates and companies can actually do that. The only difference is that this one you can access them at the primary market. This one, of course, you get them from the secondary market. And the secondary market here, we mean in Kenya, we call them the NSE. That is Nairobi Securities Exchange. This is like the JSE, the Johannesburg Security Exchange, the NSE, or the NYSE, that is the New York Stock, whatever. That's place where all the companies actually meet when they actually, you know, selling their shares in exchange of securities and what have you. So corporate bonds, this is a combination of, or rather this is a place where those companies usually float their bonds so that they can borrow securities to run their day-to-day activities. Now, see, with this 500 shilling can actually get yourself into investing in this. But collectively, what does this mean when we say we can invest as little as 500? This investment method is what we call the bond fund. The bond fund, also known as fixed deposit or fixed income fund. Fixed income fund. Okay, fixed income fund. What does it mean? The fixed income fund simply means, another name is the bond fund. This is where your money, which is 500, and someone else's money and another money, meaning like a number of people brought together. Once they get that pool of resources, kind of in a scheme, that money is taken by professionals. Are we together? That professionals, or those professionals, of course, they collectively take that money after clear and what we call a professional analysis. They take that money and invest in these particular areas. They are the one who takes this money to the secondary market where we have that available corporate bonds. Of course, they do what we call the due diligence, looking for the authenticity of that company, you know, their financial health of that particular company. How has that company been functioning and what have you, if you do not have the time. And this is what I'm telling you guys, we are in an era whereby, you know, things have become a little bit easier. There are people who are actually professionals, okay? For example, I was interacting with a certain CEO of a certain company, and the guy was telling me how they do what we call the dollar arbitrage, not really dollar arbitrage, but what we call the bond arbitrage and what have you. And they're actually making quite of a good amount of money, because you people, as we sit there somewhere doing your own things, actually the amount of money that are being transacted in a single day in this Nairobi Securities Exchange, apart from what we know commonly as stocks or shares or equities, we have other things that are going out there. But now I want to share this information in a simplistic manner. I don't want to use a very complicated financial terms and leave you along the way. No, I'm saying this. If you have as little as 500 Kenyan shilling, you can be able to invest on a something called bond fund. Bond fund, another name is called the fixed income fund, whereby that money of yours is actually invested into variety of things, and precisely they invest on the treasury bills or the government securities in combination with the C.Bonds, that's the corporate bonds. And I was actually laying the foundation of defining to you what is a corporate bond, because treasury bonds, this one I've talked about it like a million times. Are we together? So once you do exactly that, then you are good to go. And we have a variety of companies. It's only that I cannot mention those companies. And if you'd like to get the names of those companies and actuality of how you can invest, where do you go, how do you do it, what do you need, and what have you, you can always pick that number of mine from the description of this specific video, and you can actually shoot me a call or a text. Then I can take you through step by step on how you can be able to get started on that. Because if I mention the company, say it will be sound as if I'm advertising them and whatever, and they haven't paid a dime to advertise them. Anyway, now the point is this, okay? So these 500 shillings can actually, it depends on what you get as an, and by the way, just to make this clear, does not mean you can invest only 500. This is as little as, meaning it's the minimum. You can go as much as you want, and you can as well, deposit at any given moment. And of course, some of the companies do not even have the withdrawal charges, and when you are actually getting like 10,000, if you've invested like 10,000 Kenyan shilling, you can actually get that through your M-Pesa within like 24 hours. If you go beyond that, maybe say above 10,000, you can get it in your bank in a 2 to 3 business days and what have you. So it's still that money that you can be able to access it. And this one may be a bit different from the money market fund. Why? Because where these bond fund invest or the fixed income invest, they actually invest in a quite of a bit longer period of time. Remember what I told you last time, money market fund, they usually have some restrictions where they invest. There is a certain capping in terms of the period of time. They cannot go beyond that in terms of, they cannot just pick a bond that goes for 10 years and invest that your money in a money market fund. No, because they will be violating the regulations of the Capital Market Authority of Kenya. But with the bond fund or the fixed income fund, that's why you find like a little bit of the money can actually, they can stretch a little bit further. So there are chances of making more money with a bond fund compared to a money market fund. But again, be informed, underline these words, and I want you to take it very carefully. Yes, there are chances of making a little bit of more on this particular area because you're giving them the allowance of investing that money in quite an array of things. And of course, at the same time, of course, that comes a little bit of a risk. I always tell you guys, anything that has high risk always has what? Or rather, anything that has high returns usually has high risk. Because it's good to be informed with that kind of a thing. Another thing that I find bond fund kind of an interesting area of investment is because of what we call diversification. Usually over what we call diversified portfolio. There's some people who usually hear the term portfolio. They think it's a very complicated name. Portfolio simply means it's a basket of your investment. You have the bond fund, you have the balance fund, you have the MMF, you have that. So that basket that is composed of all those different things, that's what we call the portfolio. So don't get scared by that big name. There's someone who actually called me and asked me, "Hey Joseph, what is a portfolio?" It's a very big one, and it's actually a bit of intimidating one. But anyway, that's simply what it means. Now, see, when we talk about diversified portfolio, it's when you have different things. Because, yeah, I know we've talked about money market fund for a quite long period of time. So how about we shift our gear a little bit and try to venture or rather check out on other things? I'm going to be stressing much on the rates. I'm going to be talking much about the equity funds. I'm going to be talking much about things to do with normal businesses. I'm going to be talking much about some other particular areas of investment, so that at least we don't just concentrate on one thing but have another. By the way, some guys are so scared. Yeah, people don't even know all these investments actually exist. We have a lot, especially in our country, Kenya. We have a lot of areas where you can actually invest. By the way, just a quick break. Do you know that Kenya is that African country that does not have a major mineral resources? but actually features among the top 10 economies in Africa. Actually, should I say the top 7 economies in Africa? We feature there, top 8, depends, okay? Recently, Ethiopia surpassed us in terms of the GDP, not GDP per capita, but GDP nominal. They have a bit of GDP nominal, but the GDP per capita, we are a bit high. Okay, let me not complicate you with those names, but Kenya is actually a promising country, okay? Maybe I should take the next 2 minutes to advertise my country. Kenya is actually a promising country. You find we don't have oil, we don't have gold, we don't have diamond, we don't have, the only thing that we mine here in Kenya, actually not even mining, it's tea. You know, tea, we are number 3 on earth as far as the tea is concerned. I think it's after, is it China, India, and Kenya or something? But I know we are number 3. I don't know who comes up, but I'm sure China is the first one. So I don't know who is the second. In terms of that, that's what we have. But in terms of the mineral resources, we don't have any. But we are doing good. Why does this country actually become one of the biggest economies in Africa, despite us not having those mineral resources? Is because of the fintech industry, the finance and the technology. You know, you find like we are so good. For example, I love somebody by the name Vusi Tempekwaro from South Africa. I really love watching that individual, by the way. And then he was talking about the number of banks we have here in Kenya compared to the number of banks they have in South Africa, bearing in mind that South Africa has more population than us. So that tells you a lot, you know. For example, I think, and I stand corrected, you can actually verify that. We have at least, I don't know, 45 banks or something of sort, with a population of around 51, 52 million, thereabout, okay? Again, depends on when you're watching this video. I'm making this video at around October of 2024. You know, you might be watching this video 2070, be like, oh, we're not 51 million. Come on, be advised. Now, in South Africa, they're actually on 60 something million, and I think they have, I don't know, 20, 25. Again, don't crucify me. Go verify those numbers out there. Anyway, so the point is, we have an array of areas where one can actually invest and be good. And please, we are actually gone. The era of actually excusing yourself and saying, I don't have much money to invest. No, you can. As little as this. You can buy shares. You can buy, you can get in these bonds. You can actually even get into some other areas of equity fund and what have you. But today, I was actually sharing information about the bond fund, where they invest, and how you can get in terms of the returns. I may not give you a specific returns percentage, like 10, 15, whatever, but I can tell you, obviously, most of the returns nowadays in Kenya, and as of now, remember, I'm making this video at around October of 2024, we are actually playing above 10. And by the way, I don't know whether you know these guys. I think I should make a video about that. See, the inflation in Kenya has actually shifted all the way from 4.4% to 3.6%. That's quite a good news. I don't know that you know that. And you know that means good. And of course, there were some, cases of, the interest rate might be revised down or be cut or something of sort. So the inflation is quite affordable right now, okay? It's around 3.6%. That is actually places us in the, big, developed countries and what have you. Like the US, they're at around 2 point something, the UK or the Europe, they're at around 3 or 2.8 to 3% there. So when we have an inflation of 2 to 3%, that is actually manageable. Can we get a zero inflation? I don't really think so. It's possible economically. But anyway, that would be the greatest thing if it can actually happen anyway. So now the point is, right now, even if you're getting an interest of 10%, you're placed way above the 3.3% in terms of the inflation. So this is an area that if you can as well consider, put your money out there and you can get something and you can move to the next level as far as the investments are concerned. And guess what? That marks the end of this particular video, but it's not the end of me posting a video each and every time. So go ahead and like the video. Make sure that you subscribe, leave me a comment on the comment section. And by the way, don't forget this, okay? If you were interested with any of my booklets, be it either money market fund, treasury bills, bonds, whatever, you can actually get a copy, and a copy goes for only 280 Kenyan shillings. Okay. And by the way, let me leave this message to you guys. If there is an area that I've ever talked and you feel like I should verify some things, let me know on the comment section. That is good, Joseph speaking. See you in the next video.